All right, we have to talk about the most important thing right now, which is CPI. CPI just came out, and the top line number is going to be a little bit scary. Okay, we are expecting 8.1% year over year, and we got 8.2%. Okay, of course, my own personal expectation, if you have not watched the video, just check it out somewhere in the corner over here. Basically, in my expectation video, I said it very, very clearly, which is my own expectation. Month over month, we will be looking at a 0.5% month over month increase. Of course, over here, we got a 0.4%. There are a lot of publication out there saying that, it's going to be 0.7%, 0.2%. Hey, man, I said 0.5%. You can go check it out yourself. Okay. And I also said that the core inflation is going to be about 0.5% to 0.7%, which yes, it came out to be 0.6%. So I think I did pretty well on this. But anyway, okay, we have to really talk about this entire report. Why is it so horrible? And we have to really dive deep into this right now. Okay, so without further ado, let's get into this. All right, let's. Okay, so first of all, we have to look over here. Whoops. Okay, let me just can I zoom in a little bit? Okay, that's great. Okay, cool. All right, so consumer price index went up 0.4%, like I said over here. Index for less food and energy, which is your core, went up by 0.6%, which is pretty bad. All right, so if you're looking at the whole 1 month change, okay, so hold on, I probably need to, yeah, okay, so over here you can see that September of last year we got 0.4%, October 0.9%. We see a lot of like moving upwards, okay, but then slightly in July we actually saw a flattening. So of course during the July data set, a lot of people were saying, we already finally hit 0% inflation month over month. Chances are we're going to be headed towards a deflationary number for the following month. But how do you see that? Because no, it didn't happen. Okay, over here you can see, okay, August, it instead of deflating, it actually inflated. Okay, which is why August, after the CPI data, if you actually go back to look at the data itself, okay, and look at the entire stocks market, everything was bloody. Why? Because everyone is expecting negative 0.2%, negative 0.3%, or whatever it is. Okay, but we got inflationary instead of deflationary. So of course there was a total bust. Okay, of course right now if you're looking at the market, well, I'm not sure. You can just look at the market after you're watching this video. You can see that the SPY is down. You can see Nasdaq is down. You can see Dow Jones is down. All of them are down. Okay, it's actually crazy. Okay, so over here you can see September going up by 0.4%. Okay, we have like everyone was expecting it to be a deflationary number, but in fact we are still very, very strongly going up in the inflationary level. Okay, so now let's go deeper into the items itself. All right, so if you have just the basic thing, okay, this works a lot better. Okay, that's great. All right, so if you look at it, all items 8.2%. Food, okay, 11.2%. I actually said it in my expectation video as well. Food prices has been going up, creeping up slowly, bit by bit. A lot of time, we want to push it all over to energy prices. We're going to push it over to used cars prices. We're going to push it over to airline fares because those are the big numbers. Those are the ones that you see 12% increase month over month. You see 8%, 4%, 3%, whatever it is. Okay, but for food, when you analyze everything, it's about 12%, 13%, or spot. And that is if you are taking the generalized entirety of the inflation data. If later on, I'm actually going to be going deeper into the intricacy of all the food group, and you can actually see that eggs, for example, year over year is like 30% increment. So super duper crazy. Okay, so you can see over here, okay, like food at home is 13%. Okay, food away from home is 8.5%. Energy, of course, is at 19.8% year over year. Okay, but of course, we have to look at the second last column, which is over here. Okay, energy prices basically went down to negative 2.1% month over month. But let's not forget, like I said in my expectation video as well, energy prices is not supposed to be reflecting any sort of inflationary level simply because in the whole month of September, okay, we have been seeing a lot of deflationary level for oil. Oil prices have been going down. However, at the start of October, we started to get the whole Russia-Ukraine escalating the whole entire war process. Okay, the entire warfare, the bridge getting exploded, and a lot of return fire from Russia as well. So that definitely has been putting on a lot of constraint onto your supply side. all the commodities are going to be affected. And of course, as we all expected, oil prices definitely will be affected as well. And let's not forget, there's also another contributor that we have to take into account as well, which is OPEC, because OPEC is also going to be cutting down the production of oil, okay, and all the natural gases and such. OPEC is going to be affecting oil production. And if you're going to be cutting down on supply while the demand is still pretty high, inflation is definitely going to happen. Okay, so like I said before, I think that we are really missing out on the fact that, people might be happy to see, oh, great, energy prices is actually down 2.1% month over month. If you were to analyze it, it's like 24%. Okay, if you give it a year, energy prices are going to go back to it was before. That's not going to happen. That's not going to happen. Okay, now let's just dive deeper into this. Okay, like I said earlier, food by 0.8%, like I said before, I think that 0.8% is like this kind of creeping on the data, that because every single month you're getting 0.6, 0.8, 1%, you might not really realize it that all this 1% per month kind of trickle down into quite a big snowball. Okay, and that's why I think that food prices is going to be one of the biggest contributor by the end of the day. Okay, you'll be surprised. And especially for food prices, okay, as compared to like energy prices, you can say that like, commoners or like people who, are in the working class might not even use so much of like oil prices. It doesn't really affect them as much, but food prices will affect them directly. Okay, you can say that oil prices affect them in terms of transport, in terms of like, the working class, in terms of the factory, things like that. Cool, I don't care. But if you're talking about directly affecting them, food prices is definitely affecting them by a long mile. Okay, look at food away from home, up by 0.9%. Food at home raised up by 13% over the last 12 months, which, like I said before, very, very scary for them. Okay, energy, earlier, like I said, declined by 2.1% in September, falling 5% in August, which is, well, I mean, okay, kudos to you. Energy index rose 19.8% over the last year. Okay, so of course the gasoline index went up by 18.2, whatever it is. Okay, I'm just telling you that what you have to really take note of for the October CPI, which is going to be coming out in November, we are going to be seeing energy prices going up again. But of course, I wouldn't know, because the thing is that there might still be things that could transpire in the next 17 days when the October eventually ends, and then in November we might get a new set of data. Okay, so hopefully we actually see oil prices actually coming back down in the month of October, and then for November, hopefully we are able to see pricing actually go down. But if that doesn't really happen, with OPEC still doing the whole reduction of the production of oil, and on top of that, if Russia and Ukraine does not really settle whatever thing that they have for the entire warfare situation, then that's going to be a huge issue. And my lights just turned off. Okay, right, it's 9 p.m. Fair enough. Okay, but anyway, let's move on. Okay. The index for all items, Lewis, okay, we got all this. I'm going to move down all the way to the individual items, because that's where I think that's going to be very, very interesting. Okay, over here you can see used cars and trucks down by 1.1%. Okay, I think that this is going to be a very, very important subset for you guys to actually take note of. Okay, next up we got rent of primary residence up by 0.8%. Okay, if you're taking 0.8%, if you analyze it, it's about like 9 or 10%. So of course, like primary residence, I think for rental price to be going up and for the prices of houses to be going down is really good for people who are buying houses. Of course, you buy a house and you rent it out, you're going to make a lot of money. However, at the same time, it's not going to be easy for you to buy houses now. Why? Because mortgage rates are going through the roof. Okay, right now, if you're getting a house in the US, your mortgage rates are probably like 7.8%, especially with what is happening with this current CPI. 10-year treasury yields are going to be spiking up. And if 10-year treasury yields is going to be spiking up, then your mortgage rate is also going to be going up as well. So it doesn't really make sense for for rental to continue going up at this rate as well. And something for us to really take into consideration as well. Okay, medical care is up by 1% month over month. Okay, it simply means that annualized at 12% year over year for medical care service. Insane. Transportation. Okay, I think that this is where I want to talk about the transportation and also for the used cars and trucks. Transportation services is actually up by 1.9%. And why I want to talk about how this actually work out. If transportation services is up by 1.9%, currently, okay, they're actually talking about how motor vehicle maintenance and also motor vehicle insurance are also up. which generalizing it is up by 1.9% month over month. However, for the used cars and trucks, the prices are actually going down by 1.1%. But the thing is, you have to also take into consideration that people are not buying used cars and trucks, and instead they're just repairing their used cars and trucks instead of buying a new one. Okay, instead of selling their old one and buying a new one, they're just basically repairing it because why? It's too expensive, which is why used cars and trucks are going down in price. And as for the newer cars right now, okay, new vehicles are also up right now. Like over here, if you look at this, like new vehicles at the moment is up 0.7%, which is why it doesn't really make sense. Okay, so for new vehicles to be at 0.7%, which is why, chances are people are thinking, I'm just going to buy a new Toyota, I'm going to buy a new Kia, I'm going to buy a new Ford, I don't care. Okay, but the thing is that prices of new vehicles are constantly going up. And of course, at the same time, let's not forget that commodities prices are also going to be catching up. Okay, with what Russia, Ukraine, entire warfare have escalated into, commodities prices are going to be affected, which means for the next month, okay, used cars and trucks might not be going up, but I think new vehicles would definitely be going up because car prices have to be competitive. And honestly speaking, they're not really making that big of a margin for them to really be saying that, it's all right, we are not going to raise the price. Which is why if commodity price hits hard, they have to increase the price, which is why all of this is all inflation. Okay, so same thing, which is why for the whole transportation used car, done with that. Airline fares up 0.8%. Again, another thing is 0.8% month over month. Like I said before, annualize this is about 10%. Again, this is going to be horrible. Okay, I've talked about airline fares as well because the thing is that we also have to think what happened with the pandemic that happened, of course, 2 years ago. Okay, the whole entire world basically shut down, which is why airline fares basically just plummeted into zero. Well, not really zero. It's going to be a lot more expensive, if anything. But airline fares now have to take into consideration of a recovering economy on top of a rising energy prices. Because if energy prices continue to just skyrocket, okay, airlines fare, they have to actually take into consideration of, oh, hold on a second, oil prices is going up. So for us to actually transport this 200, 400, 500 people over from one country to another, it's going to take up a lot more price. The entire price margin is going to be changed. And because of that, they have to also increase the price to the consumer, which is all of us who's traveling, right? Okay, so I think airline fares is going to be something that's going to be pretty scary. Okay, right now you're looking at this, like airline fares, 42.9% year over year. Like, come on, almost 50% year over year. But of course, like I said before, we are talking about a recovering economy. I guess to some extent it is understandable. Okay, but afterwards, I was looking at all this like just random data set. I'm like, look, lettuce up 6.8%. Like, come on, people have to stop eating salads. Come on, man, like crazy. And if you continue on, food at employee sites and school is up 44.9% month over month. Take this into context, okay? We're talking from August to September in the same year, increasing by 44.9%. Absolutely crazy. Which is why when I actually saw that, I was like, what is going on? Yeah, I will show you what I actually did, okay? I was like 44.9%. August to September in the same year. I thought I was looking at year-over-year data. Honestly, I thought I was looking at year-over-year data. And then afterwards, of course, I went over to check the year-over-year data. It's actually 91%. It's a 91.4% year-over-year. Like, I'm just telling you, food prices is definitely going to be a huge thing. And of course, like I'm telling you, because Europe is going through an energy crisis as it is. And developing countries will definitely be the first one to get hit by the whole food crisis. If food prices continue to go up in this manner, I don't know, man. I think that all those developing countries that's actually helping with the primary sector, which is helping with the supply chain, with all the commodities that we do actually need, okay, those things are all going to be going into a small spiral as well, which is why we have to talk about which price spiral to some extent. But I feel I'm probably going to be talking about which price spiral during the FOMC expectation or the summary video, because I think that today we want to talk more about the inflation as a whole. So that's basically all I have for the whole entire CPI. I don't think I highlighted anything else, but it's just absolutely crazy, honestly speaking. 8.2% year over year. Month over month, we got 0.4%. Nothing close to what people actually expected. 0.2%, 0.7%. Some of the analysts was like going crazy over it. Some people even expected it to be 0% or even deflationary value, like negative 0.1%. Okay, like I said before, I don't think that that's going to be happening. Food prices is definitely going to be a persisting inflationary data that we are going to be having for quite some time. Okay, until commodity prices actually start to plummet, I don't see inflation actually getting better. And of course, if we want to take into consideration of what the FOMC is always talking about, if we're going to be increasing all the basis point, interest rate is going to be going up. Usually, it takes about 6 to 8 months for every increment of the interest rates for us to actually see the consequences or the results to actually happen. It takes about 6 to 8 months. Okay, so the thing is, if we're expecting anything from the rates increase to actually happen, most likely we have to wait till around March of 2023. And similarly, because it means that when it comes to March 2023, we have to see the demand destruction coming in. Because right now, the demand is still pretty hot. People are okay with inflation. People are still spending as if inflation is not a thing. So demand is still pretty hot. And supply is nowhere near following it with a demand at the moment. So we need a demand destruction. And until that actually happens, inflation is not going to be cooling down. And of course, when that actually happens, we're going to be entering a real recession. So, like I said before, I think that the Fed is definitely stuck between a rock and a very hard place. And I don't doubt that they are going to try their best. But clearly, right now, with this kind of data set, I'm assuming that 75 basis point is almost a certain thing. People would most likely want to argue that 100 basis point would be on the table. I'm not going to be kidding. I personally feel that 100 basis point might be on the table as well. So, of course, hopefully we have more data set for us to actually look into in this month before the FOMC actually comes by, so that, hopefully if the jobs data were to come in to say that, jobs data is actually going down, labor market is cooling off, maybe we can get back to 75 basis point. Now, I feel that, if we were to get another 100 basis point increment, the market is not going to like it. That's for sure. Getting a 75 basis point, the market is not going to like it either. So I think that, I'm not going to lie. I think that the economy is really in a very, very hard place at the moment. I'm not sure how are we going to be tackling inflation at this large scale at this moment. But anyway, that's all I have for this video right now. SPY is falling. All your tech companies are down the drain. All your food company are poof. Everything that you're into, most likely they're all going down. Like, come on, like over here you can see all the charts. All of them are going down. All of them are going down. Other than this one. This one is the SQQQ, which is basically inverse of the NASDAQ. So if the NASDAQ does well, this goes down. If the NASDAQ does badly, it goes up. And surprise, surprise, it is up by 8%. So you can see how bad the market is. But anyway, that's all I have for this video. Anyway, thank you guys so much for watching. And I'll see you guys in the next one. Thank you so much for watching.